All right, it is March 3rd, Wednesday morning. It's just after midnight. It's about 12:30 a.m. Eastern Standard Time, and we are in the after hours. The market was down. Market was down again today. We had a big up day on Monday. Tuesday, the market gave some back. And so far in the pre-market, the pre-market session, the futures are slightly higher. They're higher. I say slightly higher these days. Just being up 100 points seems like just a kind of mild move up. We've had so many big up days and big down days. So this is the NASDAQ Micro Mini chart. And as you can see, we had quite the down day. We closed at the lows here. That's Chicago time, so 1500 Chicago time. That would be 4 p.m. Eastern Standard Time. And we've been trending higher in the after hours, at least so far. So that's good news for me. I'm still holding my 3 contracts. Big difference there, though. I think I had about $700 and some odd dollars in that little box that's green. Now it's just showing $5. So we've kind of just decided to hang out right at my purchase price. So I didn't do a whole lot during the trading day. I lost some money. Market's down, I lose money. And my account value is now down to $37,530.97. I did some trading. I sold all of my shares in S&P, the 2 shares. I had 2 shares. I sold those, just got out of them, flat now in S&P 500. And I have 7 Dow contracts now, micro E-mini Dow contracts. And reason, I actually purchased those at a top. It turned out to be a top. I thought we were at a breakout, but it turned out to be a top. We actually dropped a significant amount after my purchase, and we did climb our way back up. And I had the opportunity to almost break even on the trade. I could have sold those contracts, but I held on, thinking that the bulls would take control again, given that the bears were in charge at the end of February. I was hoping that the bulls would just take over March, but it didn't happen. We pulled back again, and I thought this pullback was kind of interesting. So we went back to close to where I made the purchase, and then you see a big red candle. Then we go back up, and then we go back down, and you see the red candle here, and this, to me, based on what I've learned from gurus, I mean, we all learn from other people, and I certainly spend a lot of time learning from other traders, people who are much more educated in trading than I. I mean, it's just like if you're a professional athlete, you probably know a lot more about playing that sport than other people, but you still have a coach, and the coach hopefully knows more than you as the athlete know about the sport so that they can help you develop and be even better. So anyway, what I learned was a candle appearing like this, when you get those big red, those big down candles, and you've got that wick above, wick below that's about equal, it kind of has the look of institutional trading. So if this is an institutional trade, then what's to follow? Boom. These just look so mechanical, so symmetrical. Wick above, wick below, you get the flush out. And look where we end up. That wick comes within a millimeter of, or within a very short distance of the 200-day moving average. So again, here's your 20-day moving average, 50-day moving average, the yellow, and then you have the 200-day moving average. And so this institutional trading, you get the big flush here. They're still selling. Institutions are selling again. Big flush out, go all the way down to the 200-day moving average. So, you're chasing the weak hands out, and then you get the big uptrend again. And we've been trending higher since then. And you actually have a crossover of the 20 crossing over the 50 here. And what happens? We go down. And now you have a higher low, higher than this. It didn't go quite as low as this candle went. So, and you got this big engulfing bull candle. And you trend back higher, and now it looks like the 50-day moving, this is the 20-day moving average. The 20-day moving average is getting ready to again cross over the 50-day, only in the opposite direction, which could suggest that this might have another uptrend, which I'm certainly hoping for. So anyway, that's my interpretation of technical analysis on how the Dow is trading right now. And like Mike Tyson says, you go in there with a plan and then you get punched. Well, with technical analysis, same thing. You go in there with a plan, and then a big red candle just comes out of nowhere, and boom, plan changes. And all you do is scramble to survive. It's just like a fighter getting punched. Maybe not quite as painful. All right, so I'm down, but hopeful here. With 7 contracts, should put a little more excitement into my futures trading account. If we go higher, I'm not excited about losing money, believe me. Now, one other thing that I did on my on my options and stock account. I lost money in this account as well. However, I did put in a little bit of protection, and as you can see, I have a diamond put, and it's in the money at 320, and it's showing a little loss, but that gives me a little protection. If we get slammed, I'll make money off this put, and then that'll make me feel a little bit better as I try to ride out any major sell-off in the Dow, should that happen. If we go up, I have the potential of losing money. But what I did, I just had to put it first, and the put was actually up while the market was down. I guess the market must have pulled up right before the market closed. But what I did was I made a spread out of it, because my put wasn't making money. And then to protect a little bit of that gain, I sold an out of the money put. So I sold the 312.50 put, and I sold that, and that's losing money too. So if we go higher, that put will make money. I'm sorry, that put will stay out of the money, and so since I sold that put, I have the potential of making this $156. So let's say the Dow just charges ahead. It's at 314.19 here, and this 320 put, if by Friday, so it's 2 days to expiration, Friday's expiration. So if we go from 314 in the Dow all the way in the diamonds, that is, these are diamond puts. If we go from 314 all the way up to 320, which would be a pretty big move, I have the potential of losing $515, but I would gain $156. So the most I can lose from this is is 300 and let me get my math right. $365 approximately, plus or minus $5 there. So anyway, so that reduces the amount that I can lose. And if we go higher from 314, but not make it quite to 320, this will have some value, and I'll get this. So, as long as we don't go down to 312. If we go down to 312.50, then I'll lose money here, but I'll make money here, and I'll make more money on the put than the one that I sold. At least until the price gets down to 312.50, then they'll change at the same magnitude after that. Anyway, that was my way of protecting my futures purchase. But it doesn't protect all of it, because that's 7 contracts. And as you can see, even though we're not down that much. I've taken down $323 on that trade. So, I can lose a lot of money if we really if the market really tanks. But I'm willing to ride it out. March, April, going into May, usually a good time to be in the market. There's no guarantee there, but, given the fact that we had a pretty substantial pullback in February, I'm hoping that March and April will live up to their reputation of being good months for the market. Unfortunately, the market's so overpriced that even with the pullback, all you can do is say is, well, that's an expected move. The market's overpriced. It needed to pull back. So, it's hard to argue that we should continue higher. At the same time, what's to stop us from trending higher? The market does what it wants to do. You just have to learn your way of extracting money out of the market when you have the opportunity. Okay, that's it for the early pre-market futures trading. I hope we have a big update tomorrow or today, later today. Looking for some exciting trading on Wednesday at 9:30 a.m. when the market opens. Wish you all a very profitable trading day. Thank you.